How do you know exactly when the trend has flipped? And more importantly, how can you enter and exit the market and actually make money? I'm going to show you how using Gann's 3 never failing rules so you can avoid the feeling of FOMO and enter the market with confidence. Let's go. There are 3 simple rules for determining when one trend has ended and a new trend has begun. And I'm going to show you how I entered my positions on Bitcoin using these 3 simple rules. This example is for spotting the bull market early, but the same rules apply if you're already holding a position or you're looking to go short in the market and you're looking for the start of a new bear market trend. The first rule is a major trend line is broken. To draw the trend line, take the major high and connect it to the next major lower high. And when that trend line is broken, the first criteria is met. The second and most important rule is the overbalance in time and price. And between those two, the most important is the overbalance in time. Time is always more important than price. When determining the start of a bull market, we are actually trying to determine the end of the previous bear market. So to do that, we're looking at all the bear market rallies and we're finding the one that is the strongest. And only when the strongest rally is confirmed that this criteria can be met. Using this past bear market as an example, we're going to calculate the strength of each of these bear market rallies and determine which one is the strongest. The first rally lasted a total of 4 weeks and about $10,000. The next rally, 9 weeks, totaling $15,283. Now this is our strongest rally, so we can remove the previous rally. Now we're trying to find a rally that lasts longer than 9 weeks, $15,283. The next rally clocks in at 9 weeks, but $7,619 before a new low is formed. And since we did not get greater than 9 weeks, there's no overbalance in time, and since we didn't get greater than 15,000, an overbalance in price is also not met. So we keep going. And finally, we had a rally that lasted 20 weeks, $15,556, exceeding the previous strongest rally, both in terms of time and price. Now the second rule has been met. And finally, the third rule is a major swing top break. When the first 2 rules are met and a major swing top is broken, during a bear market, that signals the bulls have finally taken over. This is also a major Gann entry signal and one of the best times to enter the market. So where does that happen on the chart? You can see the trend line has been broken, rule number 1. We have the overbalance in time and price, rule number 2. And now we're looking for a major swing top break because we're in a bull market. We're looking for a swing top break. So where does that come? We have our first swing top break right here. When this swing top is formed, and then we bursted through it on June the 19th, the week of June 19th, and then it took off. So now we have a confirmation that all 3 criteria have been met to start the beginning of a new bull trend. But when exactly was the best time to enter? Was there an earlier signal that would have got you in at a better price? I'll explain now how Gann would have taught his students to buy Bitcoin at the cheapest price possible after the bull market has already been confirmed. And it's exactly the signal that I took to enter into my long-term positions on Bitcoin. Gann said the safest time to buy was when all 3 criteria have been met and we get a pullback. But how do you know where it will pull back to in order so you can set your limit orders to buy? And for this, Gann had another amazing rule called the 50% rule. And I'm going to show you how to use that now. So once we got that trend line confirmation, we got that overbalance confirmation, and then we got the swing top break confirmation, all 3 criteria have been met. And for most people, it's perfectly fine to enter when the 3rd criteria has been confirmed, so on that swing top break. However, sometimes this can mean that you're getting in at relatively high prices. Is it possible to get in at a lower price? This is the very moment when Gann said it's the safest time to invest. So I just removed some of the indicators to clean this up a little bit for you. And it was exactly on this bar in April that all 3 criteria were met. But for most people, at this time, this was a relatively high price to get into the market. You had your trend line broken, you had your swing top broken, and then you got your confirmation of overbalance in price at this bar. But now what Gann would suggest is to wait for a pullback and to buy at lower prices here. But how do we do that? So for that, Gann has defined the 50% rule. And this is exactly so we're going to draw the 50% from the top of this swing down to the bottom of this swing. All that does is calculates 50% of the current swing range. So this is the swing from March all the way to April. As soon as that high came in, I stretched this 50% across the swing and I set my buy orders right on that 50% level. What gave me further confidence was that this was right on the same level as the previous double top. This gave me even more confidence knowing that this was a strong area of demand. That is how you will always be on the right side of the market, so you will never miss a major trend again and you will avoid the feelings of FOMO. Click on this video here if you want to learn how to build your own mechanical swing trading system so you don't have to learn TA. All you have to do is sit back, set your orders, follow the swing chart, and just follow the rules of this system. I hope you enjoy.